Hey there folks, Greg Shepard here. Okay, in today's video, this is going to be a good one. I'm going to coherently try to verbally explain what the game plan, the end result of a game plan looks like. Okay, so hang with me on that one. I'll get into the nuances of that. Okay, for those of you that don't know me, my name is Greg Shepard. I specialize in helping folks all over the country just make sense of those oftentimes confusing TIAA accounts. You can tell I've said that once or twice before in the past. Okay, so this is your all's fault. Okay, so you all have reached out to me and asked me. We do a Zoom call or even a phone call. Ask me on the onset, what does the end result look like? What do I need to be gearing towards? Okay, you kind of want a direction to go. And in the past, like way back in the past, I'd say, well, that's for those that onboard as clients to find out. Okay, so as I've evolved with this relationship via YouTube, okay, I've helped out so many people that I'm not holding that tight to my chest as much as I used to. So a lot of you out there can do what I'm about to tell you. You can do the logistics. You can figure out the paperwork. You can figure out taking the money from here to there, most of you. What a lot of you struggle with are the investments that you have to incorporate into the plan to execute said game plan. Now, so we're not going to get into that. We're going to get into the logistics of the game plan. So, folks, this is not investment advice. Do not construe it as such. I don't know you all out there. You're great people out there, but I don't know your situation. So this is not investment advice, nor is it really strategy advice. You could construe that as such, but because there's some strategy talk in this video. So let me get to the bottom line. What does the end result typically look like? Okay, again, not one size fits all. I want to stress that, folks. Okay, um, it's a combination of two things: utilizing TIAA for what they do best, and then for what they don't do best, which I'll get into, we kick those monies out in various ways, and we custody those monies typically like in a rollover IRA or a Roth IRA outside of TIAA, in my case over at Charles Schwab. So the end result is consistent of two vendors. In my case, my client's case, Schwab, TIAA. So let's start with TIAA. Why do we use TIAA? We utilize TIAA for, in my opinion, the two things they do best. TIAA Traditional, when used properly. A lot of you folks out there do not use TIAA Traditional properly. And that, what I mean by that is kind of a worm, it's a tangent, okay? I don't want to go down right now. So utilizing TIAA Traditional where it makes sense and utilizing it the most efficient way possible, okay? Lifetime income, utilizing it for those that want it and utilizing it correctly. A lot of you out there do not do that properly either. Okay, so we're utilizing TIAA for traditional and lifetime income. If you want that lifetime income, if, okay? Everything else, we kick it out, in my case, okay, to a rollover IRA. I know there's some post-tax monies maybe. We're going to kick it out over to Charles Schwab, all right? We could even utilize TIAA on that traditional part for the conservative sleeve of the portfolio if we're not initiating lifetime income. We can still utilize that, okay, outside of lifetime income. Right now, some of those illiquid contracts are getting 5+%, okay? Nonetheless, some people like that safety, okay? Not for everybody. I'm just telling you we could utilize that. So traditional, lifetime income over TIAA, everything else, kick it out to Schwab. You invest in income producing things, typically consistent with my firm. Bond ETFs paying, again, folks, this is November of 2024. This ain't going to last forever. The party, is going to end at some point. Getting interest 8% plus, okay? As of today, folks, okay, which is November 6th, November 6th, 2024, that interest rate will slide down, I would think, going into 2025, okay? Again, not investment advice. But bond ETFs, consistent 8-9% interest, wrapped up with other income producing things, not individual bonds. I don't deal with that personally, okay? So the end result, again, combination of two things. We have, what was over here? We have TIAA, maybe traditional, maybe lifetime income. That's a source of income for you. By the way, folks, most people utilize lifetime income to take care of a certain fixed expense. You can define what that means. Some people say, hey, I just want $30,000 a year for fixed income and don't know why. It just makes me feel good. We can reverse engineer that, find out how many dollars it takes to generate that income, and throw that in traditional and kick that into lifetime income. Some of you out there are good with that, okay? For no reason other than the fact that you just want a couple $1,000s a month for the rest of your life. Perfectly fine. So TIAA, we use traditional lifetime income where it makes sense. Everything else, Schwab, you invest in these income producing investments. So you have income from TIAA in the form of lifetime income from Schwab over here to the tune of right now, November 2024, 8-ish% on the interest that money on the principal that's held over there, okay? And you're on Social Security as well. So hopefully the three main sources of income, Social Security, TIAA, and Schwab, will account for you monetarily in your retirement lives. Again, a lot of you out there can do this logistically, all right? Feel free to ask me questions regarding this convoluted topic, okay? If you need help figuring out your situation, maybe looking to onboard as a client, we can certainly have that discussion. Or if you just want more information, folks, don't be afraid to ask me. You don't have to be a client of mine or even think about onboarding for me to have a Zoom call and just try to help you out, okay? Name is Greg Shepard. You all go out and have a good one. You all take care. Bye-bye.